Welcome to Gaming Fin, your channel for everything related to the gaming industry and the financial market. So let's go and talk about Embracer Group. So Embracer Group, you mostly heard about this. It's THQ Nordic, of course, Koch Media and all of those other companies that are part of this huge holding. So here we have the Swedish, the valuation in the Swedish crowns at the Stockholm Stock Exchange. And my friends, I was already talking about this stock already since quite some time, and with 8.55% down only today, my friends, only today, and in 5 days we are 13.80% down in only 5 days. In 1 month we are fortunately up. In 6 months we are 25% down, and year to date we are also down 1.13%, and then on 1 year basis 40% down, and overall on a 5 year basis we are actually nicely up. So but you see this big stock move. So what happened actually, and where do we stand with the Embracer Group? So I really want to dive a little bit deeper into those questions today in this video. So I also haven't done actually a Embracer video since quite some time. So guys, here Embracer Group, you get it. So also we got recently latest news on the investor page, of course, interim report for the third quarter, October to December 2022. We can download some information. Then here Embracer Group publishes interim report, so we're going to check out this in detail. Also here an interesting news, and then we're going to check out the PowerPoint presentation. So if you were interested with going with me together here in this video through this PowerPoint presentation, then please stay with me. So first of all, I would say guys, first of all, we check here again some data, or we can look shortly at the 5 year chart. So we're not comparing it with SAP. Obviously SAP is going like crazy today or recently, so but we're going to check it out here on the normal chart. So I'm also invested in Embracer Group, my friends. You know this. So it's a little part of my overall stock market portfolio. I can give you the percentages. So I think this is always fair to tell you how much of my overall wealth I have invested in it. So I'm checking it. Here we go. So it's 0.54%. So, and my average price is at the moment is 72.6 Swedish crown. So, and I'm down. Yeah. And I'm down quite 33% I'm down myself. So this would be meaning I'm round about in here, so that's where I am. So I should use also TradingView the next time again. So but now we stay with Google Finance. So that's where I am. So therefore my plan is, and therefore no financial advice, my plan is also to buy a bit more Embracer Group, especially since I'm only invested 0.54% in the stock overall. So I plan to invest a little bit more. But for now, my friends, so I would say I'm observing it. I'm looking in which direction it goes. So if I'm looking now, for example, on the 1 year chart, I can absolutely imagine that the stock goes back down to 44 Swedish crowns, or even we had the low at 40 Swedish crowns. We can even go even further down. So I want to see a sort of consolidation from a mere technical point of view. I'm not a financial advisor, my friends. I'm always saying this. I'm a YouTuber, retail investor myself. I'm like you guys. I'm like you. If you're watching this and you're also just a retail investor, then you know the challenges that we have. So we have numbers, we have technical analysis, and we always have a trigger finger. So we worry sometimes that we don't sell. We worry sometimes that we don't buy fast enough. All of this. So please don't take this as financial advice, as otherwise, you lose the same amount of money as me, and that's not cool. And I don't want anyone to lose money. So, but I'm investing in those gaming companies. You know already a little bit the story if you're following my channel. If not, then please comment, like, and subscribe, of course. Overall, I'm kind of happy with the chart. Sometimes I wonder, if we look now in 2016, it was like barely 5 crowns, and then we went up to 130 crowns. And I just wonder, like, so how did this actually happen? Is it really that Embracer bought so many other companies? Because the games are a little bit specific. So I checked out some. Coffee Stain, for example, is part of their company. With Coffee Stain, they had some hits. For example, Satisfactory, Valheim was extremely successful. Also, Huntdown was slightly successful. So with Coffee Stain, they had some good hits, but also here, like Sons of the Forces, or for example, not part of them, but they also have the Metro games. Metro Exodus is also part of their portfolio. Deep Silver for a game, so they have some good games. So, and also if a new Metro comes out, so I heard about already that the new Metro will come. So therefore they have some good games, but they also bought a lot of companies. So we have to keep this in mind, my friends. So they are really a big. They are like the Swedish company that goes and takes everything that is not. Everything this was more or less for sale. So, and since the Corona crash, guys, I mean, it's just going down. It's just going down, and we are now 62% down. 62% from the top in April 2021. And I know a lot of you bought probably the stock here on the way up, and then you forgot to sell, and then you thought like in April 2021, you thought like, yeah, or in June you thought like, it's coming back. And then here, for example, you had this little bear market rally in October 21. You thought like, 25% back, so I'm buying some more. We are done. So this is the big mistake we always do, especially as retail investors. We do this mistake. So we always buy at the wrong moment, and we sell at the wrong moment. If we even sell, mostly we buy. We buy on the top and we sell on the low. So that's our issue as a retail investor. So guys, no financial advice. Don't do this. Okay, I mean, this is all basic, you know the story, so I don't want to lose too much of your time, so therefore we jump a little bit more in the numbers. So 2022, so I think this is now the annual income statement. This should be the new numbers. We're also going in the investor relation page later. So here we have, for example, revenue year on year, a positive change of 87%. I mean, then you would say, why is the stock not going up? So yeah, good question. Operating expenses went almost 200% up. So, and net income. So here's the problem, guys. Here's the problem. You see it, my friends? Here is the big issue. That's really the big issue. So it's minus 4.28 billion Swedish crowns. So it's minus 1,489.86%. The net income, net profit margin also almost down 900%. Earnings per share is also down. EBITDA is up, so EBITDA is up. That's good. Effective tax rate minus 12%. I mean, that's extremely confusing, and this is probably, I don't know, is it because they bought some companies? So all of those numbers are so crazy. They're so crazy that you sometimes wonder. I mean, they're still still a growth company. So I would say Embracer is a growth company. I mean, someone that is so aggressively acquiring other companies, other gaming studios, is obviously a growth company. But they also have to grow not only by buying more or other companies, they also have to grow by themselves. So that's very important in my opinion. So balance sheet, cash and short-term investments, 60% down, and total assets up. Yeah, total liabilities also up. So we have so total assets go up and total liabilities go up. So I mean, you know what this means, guys. And here again, I mean, just look annually, quarterly. March 2022 was terrible. And then annually now, 2022 is finishing pretty bad, and 2021 was actually a good year. So it was the Corona year, so everyone was sitting at home probably playing video games. So don't have to check out those numbers. You know the story already. So let's go to this little news, for example, very quickly. So it's a news from the 23rd of February. So Embracer Group's Middle-earth Enterprises and New Line Cinema join forces to further explore the cinematic universe of The Lord of the Rings and The Hobbit. So I think that's really cool. So through its wholly owned subsidiary Middle-earth Enterprises, so I didn't even know that they have also this company. part of the operative group Free Mode, has together with New Line Cinema and Warner Brothers Pictures concluded a multi-year agreement to collaborate on feature films based on The Lord of the Rings and The Hobbit. The strategic agreement covers multiple featured films based on the revered works of Tolkien, expanding upon the much-loved world and characters of Middle-earth. So, as I understood this correctly, this has nothing to do with video games, but it's mostly for film. So, interesting to see. So they also make films now. So that's actually that's a red light. So I actually don't want to have a video games company that is getting wasting too much money in films. So, but on the other hand, Embracer probably wants to become this incredible big entertainment company. So press release on the 16th of February. Sorry guys, I was not bringing you these informations much earlier. So net sales increased by 128%. So this is now from October. So this is the interim report, the third quarter, October to December. I had before another report. It was the overall report. So net sales increased by 128%. And then we have third quarter, October, December, net sales 128%. Sales split per operating segment. So PC console games increased by 64%. Mobile games increased by only 2%. What the heck? Tabletop games amounted to 4 million Swedish crowns. Entertainment services 71% up. And then we have cash flow from operating activities amounted to 2.8 million. Net investments in intangible assets amounted to minus 1.4 million. And then we have basic earnings per share, 1.39 Swedish crowns. So that's this was last year, I think, or last quarter. And diluted earnings per share was 1.38. Adjusted earnings per share was 0.76. And the company reiterates its previously published forecast for adjusted EBIT of 8,000 to 10,000 million. 10,000 million. So that's then 10 billion in, if I understood this correctly. So in the financial year 2022 and for 2023. Now it's interesting. So we see adjusted EBIT of, let's say, 10 million. Let's take the higher value of it, and then actually for 13.6 million, 13.6 thousand million in the financial year 2023-24. All right, so looks like it's growing. So first 9 months, April to December, net sales increased by 139%, and we only had a 3% organic growth. So I said this already before. This is something I am definitely a bit skeptical about. So I don't want this company to only grow by acquisition, so by acquiring other companies, gaming studios, by entertainment companies. So no, I don't want this. So I want actually to see organic growth of 10-15%. This would be great. The sales split per operating segment was PC console games 56, mobile games 43, tabletop then 10. So you see, okay, so that's, of course, we have then to divide this by 3 because we had now the 3 quarters before. So all right, so I'm not going through all of the numbers, but we can also check out the CEO comments. So we are pleased to announce another stable quarter for Embracer Group, delivering largely in line with the management expectations. Our diversified business mix across segment drove solid net sales. Not saying the numbers, despite a limited number of new games released. So the organic growth in the third quarter was minus 3%. So red flag, not good. Reflects tough year-on-year comparison and limited new PC console game releases. So adjusted EBIT came in at 2 billion in the quarter, despite limited contribution from content partnerships and deals, while free cash flow during the quarter improved to 1.7 billion, exceeding management expectations. So for the overall group, we reiterate our adjusted EBIT forecast of 8 to 10 billion. And 10.3 to 13.6 billion in the 23-24 fiscal year. We see a continued stable performance of for live game services and for strongest PC console franchise, but also note a more normalized market for certain categories, partly due to softer consumer purchasing power after a strong market than in 2020 and 2021, as previously communicated. So overall that means they're overall affected also by the downturn that we have in the gaming industry at the moment. So what happens with Ubisoft, with all the other gaming companies, it also happens obviously to Embracer. And we're coming to some of their games a little bit later in this video if you're interested. As previous communicated, the focus includes a notable range of outcomes from partnerships and licensing deals with several industry partners expected to be completed during the financial year 2022-23. In the mobile game segment, we expect seasonal lower activity and ad prices. So in the tabletop game segment, we expect the seasonal lowest activity. That's interesting. An adjusted EBIT margin of the financial year in line with historical patterns. Diversification provides stability. So this is their investment strategy as a holding. So they want to diversify in a lot of different games. So that's totally different, for example, with regards to CD Projekt. If you look at CD Projekt, my friends, then you say, CD Projekt, The Witcher, Cyberpunk, and if Cyberpunk fails, CD Projekt stock goes down. So that was the whole story. But here they want to have a lot of different games. So our business has grown increasingly diversified in recent years, adding stability to our results and cash flows. In the PC console game segment, Coffee Stain successfully released Goat Simulator 3 only for the Epic Game Simulator. A game simulator for the Epic Games Launcher, not for Steam, to strong acclaim from fans, providing a platform to further grow the player base over time. And then we have, together with our Danish colleague at Ghost Ship Games, who continue their impressive work with Deep Rock Galactic. There's a lot to look forward to from Coffee Stain going forward. So definitely, guys. I have to admit, I think it's impressive actually what they. That's not Deep Silver, so that's Deep Silver. But I think it's impressive what they're doing with Deep Rock Galactic. So we can check here also on Steam. There we see now how many people are online right now. So this is overwhelmingly positive. Rated 150,000 positive ratings, and they have like over 2 million followers. So this is really one of those games that became extremely successful, and they even had a peak today of 16,000, and now 15,000 are online right now. And this was Sons of the Forest being released. I would say, guys, this is extremely satisfactory. That said, delays announced in previous quarters have led to a limited number of large budget games, releases for PC console game segment, and a lower gross profit contribution, impacting operating margins. The profitability in PC console in the third quarter is also impacted by amortization of game development costs for titles released with lower return of invest. So Saints Row reboot, shall we call it a flop? I mean, they called it a game with a lower return of invest. Let's call it a flop. So, I mean, I don't like those Saints Row games, guys. I really don't like those games, and still, I'm invested in Embracer. So, but there are also a lot of other games that I actually enjoy from Embracer. It is a fact that certain operative groups in our PC console game segment have underperformed our expectations. I like this. They are honest here. This year, largely driven by a subpar ROI for its new game releases rather than a structural shift. We believe it is mainly an effect of mixed reception for several releases combined with a more normalized market and softer consumer purchasing power this year. Maybe the game is also just not good. So make better games. I'm saying this as an investor and as a gamer, guys. You know, as a gamer, I'm also very critical. Our core business is making a healthy risk-adjusted profit on games. We have therefore increased management focus and efforts to optimize investments and efficiency across the group even further. To simplify, each project has to earn its right to access. I like this. which means we will increase our efforts to put quality first even further and make sure we create unique, positive player experiences. That's very good. So from Embracer, I want to see more quality games. I don't want to see all those easy AA games, the cheap middle range games. I want to see quality games. I want to see AAA games, and I want to see games also that are not just fun games. So like Saints Row, it's just all fun. It's like Carnival, or you just make like or like Goat Simulator. I also want to see some serious games, so that's also important. So I'm confident that the impact of these factors will be short-term as the group now gears up for an increasing number of notable releases with PC console from several studios and established IP with strong historical track records. After accessing our pipeline, we are confident in clearly improved ROI on new products compared to the last quarter. So Play On, former Koch Media, Play On, you see how they write it, I still think it's ridiculous, is approaching the release of the anticipated first-person action RPG Dead Island 2. 21st of April it's coming, guys. Dead Island 2 is finally coming. Is it actually coming to Steam? So let's check quickly. Yeah, you see? Big mistake. So I think it's not coming to Steam. This means Dead Island 2 is probably on PC Epic Games Launcher exclusive. Big mistake. So companies that do this mistake, I'm always a bit angry with them. So several other upcoming large budget games have also recently been announced. So for 23-24, so Warhammer Space Marines 2, Remnant 2 and Payday 3. So those are very, very high level releases. So Payday 3 has if they don't mess it up, this will be extremely successful. Space Marines 2 will also have a lot of success with the fans, especially, and Remnant. So if they increase the quality of the Remnant in general, this could also be very successful. So in total, we have 94 projects scheduled to be released 23-24. So that's a lot. So I really like this. I really like this. Of which 58 are yet to be announced. So 58 projects we still don't even know, my friend. So imagine this. That's cool. So 94 projects for 23-24. Wow, that's really a lot. And 58 are not to be announced. So that's a reason. I have to admit, I like the Embracer stock for this, guys. I like this stock. PE ratio 25 here, by the way. Market cap 58 billion, of course. So do we have actually more data? More data on the PE ratios and other data. So no, unfortunately, it's not here on Google Finance. So. All right, so where have I been? We have invested significantly in one of the most diversified pipelines in the industry, empowered by the combined force of more than 11,000 game developers across the globe. In total, we have 8.2 billion Swedish crowns invested in ongoing game development projects as of December 31st, 2020. For context, we have 31 AAA games slated to be released by fiscal year 27 and 28. So 31 AAA games. So in the next 6-7 years, including 19 games that will ship already by 25 and 26. So in 2-3 years. So that's good. Within tabletop segments, I'm not going here in detail, so maybe mobile games is interesting. EasyBrain and Deca Games have successfully optimized user acquisition investments, balancing organic and paid downloads. This has provided strong profitability and cash flow in the quarter. The quarter saw solid sequential growth, reflecting the positive seasonality effects. However, we also experienced some headwinds from tough comparisons and lower ad prices compared to last year, impacted by Apple's changes related to the IDFA, lower player engagement post-COVID and macroeconomic factors. Our mobile gaming companies are expected to show continued profitability growth in the years ahead. So this is what I want to read. There is where you make the money. In mobile gaming, obviously, nowadays. In the current financial environment, we have built our resilience and agility by maintaining a solid balance sheet, Very good. We expect to reach our financial leverage target by the end of this financial year, with no material loans to expire prior to June 24. Going forward, we will focus on further deleveraging our balance sheet while allowing for selective continued growth investments. So, yeah, deleverage a little bit though, and please don't buy now too many new companies. So it's really not the way to go at the moment. I think you did enough, but that's just my opinion. Targeting a better balance between growth, profits, and free cash flow. Our investments have put Embracer in a strong position for organic growth in both earnings and free cash flow per share. It has also strengthened our position vis-à-vis platform owners and other industry partners looking to increase their exposure to future releases of high-quality games, capitalizing on our collective value and realizing the full potential of the Embracer ecosystem remains a priority for the group. The demand for content has never been greater, and Embracer is well positioned to leverage that demand with the largest portfolio of games and IP in the industry. We have set the goal to increase the mix of PC console games development, and that is wholly or partly funded by third parties. This mainly relates to a range of large budget upcoming games over the coming 6 years, while a majority of the overall pipeline will still be wholly funded within the group. Expanding third party funding is expected to significantly improve cash flow. This sounds good. Expanding third-party funding, so getting money from outside, and profit predictability. The Tomb Raider agreement with Amazon that we entered into during Q3 is one example of this type of partnership, and one of the deals with several industry partners. So, oh yeah, I remember they had this deal with Amazon. I didn't cover it on my channel, but I read it somewhere. So basically, if I understand this correctly, correct me, of course, guys, in the commentary section. So they will get funding money from Amazon to develop Tomb Raider. Hopefully, it's also going to be released on Steam. Previously discussed in conjunction with the second report that is jointly transformative. Additional deals are expected to close during financial year 22 and 23. To further strengthen our partnership approach, I'm happy to welcome Karine Job to blah blah blah. Yeah, chiefs and new people. Diversified assets, board of directors, etc., guys. So, and ESG ratings, we don't really care. At least on my channel. Ooh, guys, so that's a lot of information. So I think then we can go quickly through the PowerPoint. So I got 26 minutes already in, but I want to deliver this to you. So operative groups here, you see the different companies or different groups. They from Embracer, though they're in the US, they are in Paris and Sweden. So Embracer group is in Sweden, Stockholm, of course, Stockholm, Berlin, Munich, Vienna, Limassol, Cyprus, Fort Lauderdale, Frisco, USA, Livermore. So they are really global. Internal studios, total headcount over 16,000 people work. The interim report here, we get it. Group pro forma growth minus, group organic growth minus, year-on-year growth 128%. This means nothing when the organic growth is actually going down, of course. Adjusted EBIT, year-on-year growth 28% up. Adjusted EPS after full dilution 70 Swedish krona cents. Do you call this like that? Swedish krona cents. Free cash flow 1.722 million adjusted. EBIT forecast, here we have it. So the same numbers I already told you guys. So here, biggest information, that island is coming out in April 21st. MSCI upgraded our ESG rating from BBB to A. I don't care. Partnership and licensing deals expected to be closed 22-23. PC console return of invest. Change of listing venue to the Nasdaq. Goat Simulator Coffee Stain successful release. Cash flow drivers, Easy Brain and Asmodee titles, and 31 AAA games, and 8.2 billion invested. So here we get all the information. This is the growth here. Financial growth. Woo! And it goes up and up and up. So adjusted EPS after full dilution. So EPS goes up overall. So that's nice to see. Adjusted EBIT. Net sales. Everything goes up, but always a question. This is probably all based on the fact that not on the organic growth. I want to see those numbers with the organic growth. What I don't like, for example, total headcount goes up like crazy. It's good to have a lot of people, giving a lot of people a job, but on the other hand, so don't get too big. don't get too big. Do not have too many internal studios here. Also, they were growing massively in internal studios, and in ongoing projects actually didn't grow so much, from 216, and then they had a headcount almost doubled, and then but the internal projects didn't really double, so also not so good. So yeah, see guys, so I'm invested in Embracer, and I still always find some negative points as well, so that's also important. Operative groups by segment. Let's say it's split. Here we see PC 31%, mobile 13%, tabletop 36%, and entertainment services 20%. So in the third quarter. Let's say it's revenue split. Get also more data, back catalog sales. So I like this actually, the back catalog. I think the back catalog is very important. So as a gamer, I think it's a very important aspect of each company. And if you have a lot of good games in the back catalog, you can make a lot of money. So here we see SnowRunner, Borderlands 3, Chivalry, Insurgency, Hot Wheels Unleashed. All of those games are back catalog, and it's actually up in the third quarter. And overall, it's actually also up with regard to 2020 and 21, 2020 and 2022. New releases we had here: Knights, Honor, Sovereign, Dakar. I have to admit, all of those games, I don't have a single one of those games, and I'm really not interested in those games. And the problem is, they're also coming to Steam. That's a big mistake. Big mistake. So I told myself once, I'm not going to invest too much in companies that don't bring their games to Steam. But now you see, I'm even invested. Now I'm even invested in a company that brings a lot of games to the Epic Games Launcher exclusively. So why is there Evil West from Flying Wild Dog Focus Entertainment? That's interesting. Why do they have this picture? Mobile games, tabletop games. Here you see some of those tabletop games, mobile games. So maybe you remember some of those games. So Asmodee highlights resilient market in challenging context. So in a challenging global socio-economic context, the tabletop market shows a resilient performance with strong growth in the TCG segment and moderate decline in games against record high comparison. All right, tabletop market. So solid P&L, performance driven, unwinding of inventory on track and driving. Is this still tabletop? I think this is still tabletop, guys. So this is tabletop. All the Asmodee is tabletop. Entertainment and services. So here, movies. They make movies. 5 titles in production with third-party licensed partners that will release during the next 24 months. So Grimforce, Walheim Merch Store, Dark Horse Entertainment, Healthy, pipeline of projects in production, Middle-earth Enterprises. So this is their Middle-earth Enterprise. So Play On Pictures, for example, they have Dark Horse Media. So you see, but that's overall it's good. I mean, overall it's good if it makes money. If it makes money, it's good. If it doesn't make money, then obviously it's not that that to be welcomed. So market update, global video games market revenue forecast. That's an important part. That's important. So what shall we say? The global video games market is estimated to grow plus 5% year on year to $194 billion. So driven by much better console supply and stronger lineup of new releases among other factors. So 5% year on year. That's great. 2022 was a corrective year following 2 years of pandemic-induced growth, with the global games market declining by 4% year over year. Compared to 2019, the market grew by 28%. This is just fantastic, guys. I mean, imagine 28% in 4 years. Honestly, that's good. That's great. That's great. Console plus 9%. Guys, all of this is great. I really like how the video games market grows. Therefore, I'm invested in a lot of gaming companies. So the longer term growth prospect also remains strong. So longer term 7% between 2019 and 2025. So 1 star. Newzoo. Tabletop games market, which includes strategic trading cards and board games, has been stable during April-December. Yeah, I don't think this is a it's necessarily a market this will grow so much, this tabletop market. And then we have cash flow and investments. Solid cash flow generation in the quarter driven by reduced inventory and cash flow. inflow from notable customer contracts. Actions initiated in previous quarters to focus on working capital reductions are progressing according to plan. Oh la la. So I'm not a financial advisor. I'm always telling you this. So if you have more knowledge how you read now this cash flow and investment statement, and please write it in the commentary section. So I'm really interested also to learn a little bit. So for the PC console game segment, we see a continued stable performance for live game service and for our strongest franchises, but also note a more normalized market for certain categories after a strong market in both 2022-21. There are no major game releases expected in the quarter. As previously communicated, a notable range of outcomes from partnership and licensing deals is expected to be completed and to contribute. So in the mobile game segment, we expect seasonally lower activity and ad prices in quarter 4 and an adjusted EBIT margin below the year-to-date average. Worth noting, in the comparable period last year, we had a notable income from one specific partnership deal in the mobile game segment. So, and then tabletop games again. So, deep dives and other presentations. So, scalable corporate capabilities at the parent company. So, headcounts. Karine, yup. So 2024 games in the pipeline. So I like that. So you also see AAA projects, 31, AA and AA Indie, more than 40 million Swedish crowns. And then we have less than 40 million Swedish crowns. So, video's getting long, guys. Video's getting long. So this is a very long video. So I'm happy to provide you with all this information. Based on local management estimates, project split per operative group. So THQ Nordic, Saber, Play On, Gearbox, Free Mode, Coffee Stain, Crystal Dynamics, very small here, and Amplifier. So THQ Nordic, Play On Saber. So those are the big ones. 94 games in the pipeline. Oh yeah. I was publishing actually this. I was posting this on my Twitter. So also check out my Twitter account. I'm sharing my Twitter account with my other YouTube channel, my gaming YouTube channel. So here we go. Dead Island 2, Remnant 2, Payday 3, Hyperlight Breaker, Space Marine 2, Homeworld 3, Outcast 2. That's not interesting. Alone in the Darkest Interjector Line 3 is not so interesting. So for me, interesting as a gamer is Space Marine 2, Hyperlight, I'm going to play Dead Island 2, Remnant, Payday 3, and Alone in the Dark. 31 AAA games in the pipeline up to 27-28. Here we go again. Wow. All right, so guys, I'll let you read a little bit through this report here. Now, project return of investor. I really appreciate actually the investor relation page on Embracer. So they give us a lot of good data. They give us a lot of good data that we can use to better understand this company. So this is definitely cool. Ghost Ship Game Strategy Update. Here we go. Deep Rock Galactic. Voila. Some information about Deep Rock Galactic if you're interested in Deep Rock Galactic. So here you get a lot of infos, guys. So a lot of infos. All right, so that's it. Wow, guys, this was a long video. I think the longest video on my channel. So I would say this is the must-watch video. If you consider investing in Embracer Group. So I'm not saying invest or invest not. So guys, you know this. I'm never doing this. This is you always have to make up your own mind, your own responsibility if you invest. So if you invest your money, only invest money that you can lose to. That you can afford to lose, better said. And you know, it's a tricky game. Investing is very, very tricky. So imagine you invested here on the top and now you're 66% down. Well, that's not cool, guys. So, but of course, in all the companies that we discuss on our channel, there are opportunities. So it's for you also to find out which of those opportunities are the best. Oh, look here, SAP. So going crazy recently. But yeah, it's not a growth company. All right, guys. With that, I'm leaving it here. So as I said, I'm invested in Embracer. I'm personally following this now. I'm also in the miners, so for me this is a long-term project. I'm staying in this stock at least 10 years. If you can't stay so long in a stock, then always consider maybe other ways to invest your money. So having said this, see you next time. Bye bye.